Well, great to be back. Thank you so much for staying with those interviews there. Minister of Industry, Trade and Investments, and also Mr. Tajuddin Ibrahim there speaking around inflation, and for the minister about the tariff issues that has to do with the AfCFTA. Well, let's take it a step further. And the U.S. Federal Reserve's chair, Mr. Jerome Powell, has warned Mr. Donald Trump's tariffs that were generating a challenging scenario for the central bank and were likely to worsen inflation. Powell's comments, that's earlier yesterday, came as the United States stock market had already been rattled by a new trade restriction on the chip designer Nvidia. The well-off picked up by Powell spoke to the Economic Club of Chicago. The S&P 500 index ended the day down 2%. The tech-heavy NASDAQ index fell 3%, and the Dow Jones dropped 1.7%. The new administration is in the process of implementing substantial policy changes in the 4 distinct areas: trade, immigration, fiscal policy, regulation. These policies are still revolving, and the effects in the economy remains high and uncertain. Powell said U.S. economy as well as was well positioned, but added that Trump's tariff were likely to cause at least a temporary rise in inflation. The inflationary effects could also be more persistent. Nvidia, the California company of the heart of revolution in artificial intelligence technology, lost billions of dollars from its market value at the opening bell, with its shares down 8.5% by early afternoon. Let's join Mr. Gbenga Ogurinola. He joins us from the United Kingdom. He's an investment and financial advisor. Good afternoon, Mr. Ogurinola. It's good to have you join the program.
Good afternoon, Tolu. It's nice to be here again today.
Well, before I even go to this report or this comments from Powell, we've seen the impact of Trump's tariff on the overall market. At first, there was this drag down. Immediately, he came up with all of this new tariffs and reciprocal tariffs from other countries. Now, what is your understanding of this, considering where we've been, the challenges across the globe?
Yes, I think it's a very challenging period in the global economy currently. The Trump administration, when he resumed, in March, there was this first tariff that he released, and that caused a lot of panic in the markets. And just a month after, there was another one which was even more radical, and it caused what some would call Armageddon in the markets. And we've been having that in the last 2 or 3 weeks now. And it seems as if it's not abating, because the way investors have reacted has been very sharp. You'll recall that I said that we'll be seeing a lot of volatility and sharp reactions this year. And that's what we've been seeing in the past few weeks. And I believe that we might see more of that depending on how the Trump administration interprets what is happening in the current situation. Because if care is not taken, they could actually erode so much confidence in the U.S. markets. The U.S. economy is actually the largest financial economy in the global markets. And if that confidence is eroded, then it's likely that people will look for alternative ways or alternative investment destinations. So it's I believe that it's something that the U.S. economy and the U.S. administrators needs to really consider. The policies that has been implemented, the impact on the economy, the impact on, we all regard the U.S. economy as the #1 economy and investment destination globally. And if care is not taken, that could be taken away from them, and people might start looking at other alternative ways and alternative destinations of investments.
And when that happens, you're an investment and financial advisor. So what is the implication of this on America and, of course, on the global economy? Now, take into consideration that even the WTO, that's the World Trade Organization, has come up clearly to say that Trump's tariff will send international trade into reverse this year.
Yes, not only into reverse, but we would also see countries beginning to look at other allies that they could actually trust and work with, because the impacts is something that has to do with so many sectors. It's not just the financial market. Now we're also talking about inflation. We are talking about interest rates. We are talking about prices of commodities. So it's a major impact on the global economy. And I believe that almost every nation would feel the impact. Yes, for those in the developing world, they are not so much impacted, but they, one way or the other too. I mean, because they also import goods from these countries. One way or the other, they would feel the impact. But in terms of maybe them being involved, yes, they might not be involved in the war, but the impact will be felt globally. So it's something that the U.S. economy needs to really have a rethink. Already, one of the things, one of the indicators, which is the Treasury, the bond of the U.S., is already been affected. People. So the way the financial market work is that when you see that the stock market is having a downturn, you see investors beginning to invest in government gilts and bonds, which is a more relatively safer form of investments. But in this case, we see that even investors are shunning the U.S. Treasury and bonds, and that is a very loud statement, which I believe that the drivers of the U.S. economy should be able to really see that if care is not taken, they are going to lose their position in the world. In the face of the world, in the global economy generally. If you look at the stock markets globally, the market capitalization is about $124 to $125 trillion. And out of that 124, 125, the U.S. economy alone has a market capitalization of, the U.S. stock market has a market capitalization of about 53 trillion. So almost half of the world stock market, resides in the U.S. Economy. And if they begin to lose all that to other countries, if we look at the markets since the Liberation Day tariffs, which Trump announced, I think that was 2nd of April, you'll see that the stock markets in the US have consistently gone down. And you see other European countries too having the same feel. But most of these European countries, their bond markets has been very vibrant now. You see a lot of investors going into the bond market because they want to save. They are looking for safe havens for their investments. Unlike in the US, where you see the stock market is crashing, the treasury is also crashing because people are not investing. The yields are getting higher because just to hold people, to dissuade people from selling their bonds. That's the reason why the yields are going higher. So you just see that the US economy currently is in a shambles. And if the administrators of this economy, if they are not seeing the handwriting on the wall, then it will be very unfortunate because they would have really spoiled the economy before they realize, and things might be a bit too late for them at that time.
Let's look at Trump's crypto revolution. There's been this focus on the crypto market. And even in Nigeria, with the just passed securities law that has been passed into law, that's the Securities Act and all of that is now a law actually. We see that there is also room for crypto and of course digital assets to be traded across markets. But my question to you would be, what change? Is there any change that would put into the market, one way or the other, talking about both global and the local scene?
Yes, it will deepen the market. The introduction and embracing of the digital currency is going to deepen the markets where investors will have alternative form of investments, even though it is still very unclear to so many people. But you see that majority of even governments are already embracing the digital currency and also trying to ensure that they are not left out, in this revolution. So indeed, the digital currencies, the digital market has come to stay, and every government that does not embrace it will be left behind in the revolution. Proud to Trump's coming on board because of some of his antecedents and some of the statements he's made in support of the digital currency. We saw a very sharp increase in the prices of digital currency, at least the popular ones. And I believe that is still on the card. But the important thing is because the US is a leader in the financial sector, is a leader in some of these, even in the area of digital currency, they are regarded as the leader and the pace setter. And now, so the world is looking up to them to see if, with all that is happening, if they will still continue, to lead the pace in this in this revolution of digital currency. Now, there's going to be a sort of paucity whereby people will pause to see what is actually happening generally in the global economy. So that would also determine, how far and how quick we would see more people responding and embracing even to the digital currencies revolution. But as it is now, it's all dependent on, let's watch, let's see how America will handle all these challenges that they've put themselves, all this mess that they've put themselves and put the world. And based on that, then there will be a direction of where to go, even in the area of the digital currency.
Well, as an investment advisor, and you talk to people, to make decisions and all of that. I've spoken to some analysts and they've told me, Tolu, this is almost like the best time to invest. Some will tell you, take advantage of cheap stocks, take advantage of all of this and, make more money. What, in your view, is it a step in the right direction to invest in stocks at this time?
Well, for those that have deep pockets, I would say yes, they could. They could begin to invest gradually. It's not like plunging yourself into it and say, oh, the market has gotten to its low, to its deep, because it's all a function of how the American market or the American administrators respond. So I wouldn't say that we are in the low. Yes, if you have a deep pocket, you can begin to put in some money, but not so much, because I remember last month when we spoke, we saw that the market was in red, and for some people then they felt that, oh, that was a good time to put money into the markets. 2-3 weeks after, or maybe a month after, it got worse. And so you wonder, for those that have put in so much as at that time, do they still have more to put in again? Yes, if they do, they can put more again. But what I would just say is being cautious. And, I've also said several times that investors should be middle tenure focus and not a short tenure focus currently. And you should be looking at medium, long-term focus and not short-term focus in terms of your investments. But indeed, if you have the money, you can begin to put in some money into the market now, but maybe not all the funds. Still watch and see if you see the market come down again. Yes, you can put in more again and reduce your initial capital valuation.
So back home to Nigeria, let's end with the trading in our markets in Nigeria. We still also see that, of course, flip-flop, but many will say there's been a bit of stability. Fitch came up with good ratings for Nigeria, and that is what investors, or those are you talking to, would like to hear. They want to know where there's stability and all of that. And I think that's a good one, considering those figures that we've seen. Though we've seen inflation jump a bit higher, but in your thoughts, now performance of Nigeria's market, what do you make of it? It's closing positive today.
Yes, so if we look at all the markets, the major markets in the world in the last few days, yesterday I took a stock of where many of them are, and a lot of them are in the red. We see some that have lost as much as 15% year to date, some 10%. I mean, some of the major markets have lost quite a handful this year. The Nigerian market, on the other hand, has been quite relatively stable. As of yesterday, we had about almost like 1% year to date, though it looks small. But when you compare with other markets that have lost 15, 10, 6% year to date, that seems to be a good place to be. And I think we can only get better because, like I said, with what is happening in the world, firstly, there's a lot of reservations for investment in the US market now. People are not investing in the US markets. The implication is that even fund managers that have the box, that have the fund, they are running away from the US market, avoiding the US market currently. And the destination for some of these fund managers and investors will be a more relatively stable economy where there is no drama. You know, people don't want a place where they will put their investments and there's a lot of talk and drama and uncertainty. So if we in Nigeria and the developing world, if we can get our acts right, I think this is one of the best times to really get investors coming en masse into our markets. If we have the right products, if we have the right attraction, if we have the right environment, we have the right security in place and all that, I believe that it's going to bring massive inflow of foreign investment, because as it is now, investors are looking for safe havens where they can invest. There's so much money to be invested, and the investment destination is no longer that attractive destination. And so they are looking for other destinations. And if we can make our markets really attractive for investors, I believe that we would get a large inflow of investors, not just into the capital markets, but into our economy generally. Because people are looking for new brides, they are looking for new allies, they are looking for new partners. And if we can get it right, then we would have, in the Nigerian markets, we'll have a lot of smiles, even with all the things that is happening around the world.
Indeed, we need those smiles to come back to our faces. Mr. Gbenga Grinola, always a pleasure having this chat with you. I must thank you so much, investment and financial advisor. You joined me live from the United Kingdom. Enjoy the rest of your day.
Thank you, Tolu. Bye.
All right, then, that's our show today. Well, it's a public holiday tomorrow. But of course, as always, we'll be here to bring you up to speed with happenings around the world of business. We have a big package for you tomorrow. Make sure you join us at 2 p.m. where we'll be talking more around the world of business. Do stay safe. I'll see ya. Enjoy your day.